Every year, the IRS adjusts tax brackets to account for inflation, and there's another important number the government also tinkers with. That is the standard deduction. Here's CBS News business analyst Jill Schlesinger.
The standard deduction is the amount of money that kind of gets lopped off of the income, and then the IRS taxes everything after that. So for 2025, it's going to be $15,000 if you're a single filer. It's going to be $30,000 if you're filing jointly. It's $22,500 if you are head of household. 87% of people file the standard deduction, so this is an important number, and it's going up, and that's good for you.
That is good, but the other shoe might drop at the end of next year when the Trump tax cuts are currently due to expire. If they're not renewed, the standard deduction is going to go down to the 2017 levels, which means, well, you'll be paying more. So with that in mind, that possibility, what can we do now to take advantage of the lower rates we have today?
Well, with the election last week, I guess no matter, what your feeling is on Washington, the fact remains the same is that our government has a massive debt problem that we've got into. And it's fair to say that, either side at some point is going to have to make some changes to the tax code that's out there and dealing with, where we're at and the massive unfunded liabilities that our country has. So what you want to do is you want to make sure that you're taking advantage of lower tax rates. There's two systems of taxation, one for the informed and one for the uninformed. And what you want to be is you want to be informed in your situation. So what we've done for our clients is we put together what is called the Tax Savers Checklist. It's one of the items that we go through when we go through that retirement team action plan. And again, keep in mind that retirement team action plan, we're looking at a comprehensive overview and we're trying to identify, opportunities and eliminate threats that people face. The Retirement Savers Tax Saving Checklist has 25 items that we go through. This is the time of year that you really want to kind of get this put in place because there are going to be different tax laws and rules that expire as early as December 31st. So if you're looking at ways to maybe reduce and or eliminate taxes not only this year, but in the future, that tax saver checklist is going to be really handy for you. And let me walk you through what we're going to do. First of all, we're going to create a 2024 tax roadmap for you. In the 2024 tax roadmap, what we're going to do is we're going to show you where you fit and where you possibly could end up on the tax continuum. And visually what it's going to do is it's going to show us, is there a planning opportunity with where you're at today to look at trying to minimize the taxes of where you feel in the future. And the conventional wisdom is wrong in the fact that they have taught people to save and invest in tax-deferred retirement accounts because when you get into retirement, your tax rates will be lower. After 30 years of doing this, I would say that many of my retirees, their tax rates are the same, if not higher in retirement time, especially when you add the fact that, Social Security is taxable for many retirees. So for those people who were successful in saving and investing, they could be at the crosshairs of where higher taxes are going to be. And the reason being is the biggest or second biggest asset that a retiree owns is either their house or their retirement account. And so in taxing your retirement account, it could be an easy solution. In the Tax Savers Checklist, what we can do for you is look at doing an IRA to Roth IRA conversion, do an analysis to help you determine if that could be a good approach for you before year end. You have the ability to make IRA or Roth IRA contributions. Now, those contributions can be extended out until when you file your 2024 tax or April 15th of next year. Then what we want to do is we want to look at how to develop your plan for optimization of your retirement account. So where do you draw money from? In an earlier segment, I was talking about drawing money from your 401k or your IRA can affect your health insurance cost, but taking money from non-retirement accounts or Roths may not impact your health insurance cost. So we're going to look at optimal efficiency from withdrawal standpoints. We're going to look at utilizing charitable contributions. So things like if you're philanthropic, making donations to your church or charity, and possibly using things like your required minimum distributions and how to set those up. How to make sure that you're setting up a plan that could be designed to maximize the legacy that you live to your loved ones. End of the year, you've got to look at your capital gain harvesting. You've got to look at your capital loss harvesting. And again, another deadline that you got to hit before end of the year, things like funding your health savings account. So these deadlines are quickly approaching, and most of these companies are on a best effort basis. So I would encourage you now to take the time if you want to look at a 2024 tax game plan.
quite literally no time like the present to start planning for future taxes and how to mitigate that tax saving checklist, part of the retirement team action plan. And you can have that on your side, the experience of America's retirement headquarters, by giving a call, setting up a time right now, 419-794-3030. It's 419-794-3030, or the website arhq.com.